Well, good evening and welcome to the third in our series of Global Leader Dialogues. Thank you very much for your participation tonight, wherever you're coming in from around the globe. We have some participants who haven't quite joined us yet, but I'd like to start the webinar so that we can run to time. The webinar is recorded tonight, and anyone who wasn't able to join us will have the opportunity to review the webinar. My name is Melina Morrison, and I'm the CEO of the Business Council of Cooperatives and Mutuals. I'm very happy to moderate tonight, and I thank you again for joining us. We are in a series of dialogues with global leaders from the cooperative and mutual sector, and I'm very pleased to introduce our guest presenter for this third dialogue. Shaun Tarbuck is the Chief Executive of the International Cooperative and Mutual Insurance Federation, or ICMIF. ICMIF is the global peak for mutual insurers and promotes and develops the sector globally. ICMIF provides valuable and cutting-edge information, research and evidence and represents the interests of the sector globally. I'd also like to take this opportunity to thank our webinar hosts, LBMX, for their generous support of the whole series of Global Leader Dialogues. And if you enjoy tonight's webinar, I hope you will visit the website and either go back to the webinars we've already hosted or sign up for the ones that are coming. Before I hand over to Shaun, I would just like to give you a little bit of background about Shaun and his work, a very important work in this sector. Shaun was appointed the Chief Executive of ICMIF in 2005. He is a regular speaker on strategic issues affecting the mutual insurance sector and the value that cooperative and mutual insurers bring to the market. Shaun is also president of All Nations Incorporated, a US-based capital support vehicle for ICMIF's developing members. Shaun is a board member of Regis Mutual, an organisation that sets up mutual insurers in the UK and Australia. Shaun, if you would please turn your webcam on, we will soon cross to your presentation. Tonight, Shaun will discuss the huge growth in global mutual insurance. Since 2007, the mutual and cooperative model has been the fastest growing part of the global insurance market. Shaun will discuss the reasons why we're seeing this quite phenomenal growth and touch on regionalism in terms of the growth and the strategies that are supporting this growth. Insurance is the largest sector within the cooperative movement also, and many of the innovative strategies that Shaun will talk about tonight are being used and are transferable to other cooperative businesses. Shaun will also cover the key challenges facing CEOs in the current market, including the tsunami of regulation. This presentation will run for approximately 30 minutes, after which you will have the opportunity for Q&A, and I invite you to put your questions to Shaun using the dialogue box. Shaun, if you would now start your presentation by turning on your mic.
Okay. Thanks, Melina, and good evening to all of you in Australia. I had the pleasure of being over there a couple of weeks ago with Melina for the B8. It's a wonderful place, and good to see you're still top of the gold medal charts at the Commonwealth Games. We'll see where we end up at the end of the day, but that's another challenge, isn't it? I'm delighted to be able to speak to you this evening, and for those of you that might watch it at a later date on a podcast, welcome as well. My first task, as Melina has outlined, is to talk a little bit about the sector and why it's growing, and then I'm going to go more into the challenges that the sector faces and how our members are actually doing those challenges and how they're aligning themselves to those. So I'm going to go through the first slides quite quickly because you will have them, and they're more for your data that you can review at a later stage. But just to give you an idea, ICMIF is a global network of member-owned insurers. We have 225 members in 73 countries. We just had another new one this morning from South Africa, so that's 226 now. We've got regional offices in Europe, in the Americas, in Washington, and in Asia, in Japan. As I said earlier, we are a broad church of organisations. Member-owned insurers is how we classify ourselves, but we did originally come out of the cooperative insurance movement from the International Cooperative Alliance. But mutuals are an older form of member-owned business, and we've got some very old ones in our membership dating back to 1762. Some of the more recent ones you might see are risk pooling, fraternals, reciprocals, community-owned based organisations, and of course you've got friendly societies in your country as well, which are equally as old as the mutuals. So we are a very broad church, and we have many different types of mutuals in our membership. To give you some picture of how big we are as a sector, because I think this is very important. Many of our mutuals that are members and those that aren't don't realise how big our sector actually is. We're about 1.2 trillion US dollars in premiums. We're 26.7% of the world's insurance market, just over a quarter of that market. And when you add up all of our assets, we're actually 7.7 trillion US dollars in assets. That's about 30% of the world's insurance assets. So they're not small. We also have 800 million policyholders. So again, that's a sizable chunk of the world's world's market, world's population. And when I raised some of this data at the B20 meeting in Sydney, I think those that were present there, who primarily weren't from the banking, they were from the banking industry, not the insurance industry, and they certainly didn't know the mutual and cooperative sector. They didn't realise how big we were, and I think it does paint a stark picture that we need to be part of the B20 and the global discussions that are going on at the moment, because these numbers show that we should be. So these numbers come out every year. We produce an annual report called the Global Mutual Market Share, and I'll share with you some of the data that comes from that in a minute. So, as Melina said, the mutuals are the fastest growing part of the insurance sector, and you can see from this chart that the orange bar on the left there is the total market over the last 5 years, and that's grown by 11.8%. But when you look at the mutual sector, we've actually grown by 27.3%. So we've grown quite substantially over the last 5 years. And we've grown both in life and non-life as well, and you can see the numbers in that data. And then just to paint a similar picture, slightly different way, you can see where we came from in 2007, which is 23.4% of the market to 26.7% of the market. I know it's been static last year, but I think the early numbers for 2013 are showing pretty good growth for us as well. So I think we might see a slight uptick in 2013. And you can see again the split between life and non-life, with the life being a little bit higher than the non-life. When it comes to the regional market share growth, again over the last 5 years, each of the regions has outperformed its own market. Your area, Asia and Oceania, are lumped together in that one. The reason it's not grown as fast as some of the others is because there are no mutuals in China, and China has played a significant growth factor in the Asian market there. But Australia is certainly doing very well, as you'll see from the next slide. So there again, you'll see the 26.7 to the 23.4 growth, which is a 14% increase in our mutual market share over that period. And then the largest 10 countries in the world, in terms of insurance markets, what is really interesting here is to see that 5 of them have market share of over 30%. In fact, most of them are over 40. So the USA is 30.4%, Japan, France, Germany and Netherlands are all over 40%. So they're quite significant market shares that we have in some of these countries. And that's even after some of these have seen quite significant demutualizations. I've added Australia in there as well. They're the 12th largest market in the world. And again, you can see good growth there. They've gone in the last 3 years from 8.9% market share to 10.3%. So you're growing quite nicely in Australia as well. And when it comes to assets, you can again see the growth in the assets there from 5.9 trillion to 7.7. And we are 30% of the insurance assets, and these have increased. Again, important number if you're using global data to talk to external people, is that we've increased our assets by 29% since 2007. That's quite phenomenal. Where do all the mutual policyholders come from? Well, I said earlier there are 800 million of them. They're about equal between Europe and North America. And then in Asia, we've got about 114 million people who are policyholders there as well. So again, it gives you a picture as to where they all are coming from. But the oldest markets for mutuals and co-ops are Europe and North America. So it's no surprise that they're the two largest. And where are the most in terms of numbers of members? Well, again, it's the USA, Germany, Canada, and you can see the numbers of mutuals there. So really half the mutuals are based in the USA, which most people wouldn't recognize as being a mutual-led country in terms of insurance, because most people think of it as a very capitalistic country. So I think this is good to recognize where the size of the mutuals are. And I've just managed to get Australia in there at number 11. They've got 54 mutuals in Australia. So you're nearly in the top 10. Create a few more and you'll overtake Japan. Maybe Japan will demutualize a few as well, so it'll get you closer. In terms of who are the largest, and I've just put them there because I think, again, it helps frame the size of some of these mutual organizations around the world when you're talking to external people, stakeholders in your own market. And Zenkiren, which is a farming-based mutual, it's only in Japan, is the largest in the world. Nippon Life is a life company, as you can see, and it's spread a little bit wider. But some of those names you'll recognize, State Farm. So farming plays a major role in a lot of it. Crédit Agricole in France. And then Achmea, again, is a farming-based one in the Netherlands. The largest Australian mutual is HCF, the healthcare one in Sydney. And that's at number 97 in the list of 500. Melina mentioned earlier that where the insurance sector fits in terms of the global market, and the International Cooperative Alliance, the ICA, produce every year a World Cooperative Monitor, which looks at the largest co-ops and turnover of the co-ops and the impact of the co-ops around the world. Well, on the largest 300 which they print, 123 of those are actually insurance co-ops and mutuals. That's 41%. And by premiums, or by turnover, as the terms that they use, there are 31% of the total turnover of the businesses over 100 million are actually insurance ones. So we are the largest sector within the cooperative movement globally. So just coming back a little bit to ICMIF members, as I said earlier, we're now 226. How would you define them? Well, we are actually the fastest growing part of the insurance market, we said earlier, but the actual ICMIF members are the fastest growing part of the mutual insurance sector as well. So generally speaking, they are the innovative ones. They're the ones that in most countries other insurers tend to look up to as being the market leaders in their core business, in their core businesses. We can prove that by numbers. Again, you recognize some of these numbers from the earlier slide. The market changed or grew by 11.8%. The mutual market grew by 27.3%, but ICMIF members grew by 30%. So again, the stats all show that what we try to achieve through the ICMIF membership of sharing best practices is actually working. And again, in terms of membership growth, we've seen good growth over the last 12 years. From 126, we're almost doubled it now. That's our target in 3 years' time. Where do our members come from? 36% are co-ops and 48% are mutuals. We have Takaful, which is the Islamic insurance, and then 8% are others. In terms of where are they based, again, equally between Europe and the Americas, with 20% in Asia, 12% in Africa and Middle East. Just painting a picture of where the mutuals are. And in terms of premiums, what's the split between life and non-life? It's almost equal. But again, on this slide, you can see there's a health element as well, which we class as non-life in this particular instance. When it comes to the premium split of the non-life, again, you can see nearly 30% of that is motor, 28% property, 23% health. They're the three biggest areas, and then other small areas like workers' comp, marine and agricultural have a small portion. And when it comes to life, it's mostly 72% life, 15% annuities, 7% investments and savings. So very traditional insurance markets, really. ICMIF as an organisation has been going, as I said earlier, since 1922. We have a new strategy, which is being formulated right now. We're at the final stages of it for the board to approve in a couple of months' time. And our focus is very much going to be, over the next 4 years, going to be on growth and building a globally recognised influential brand. And how are we going to do that? Well, we're going to do it by providing ICMIF services that only our members can get. And they'll come under three categories. Networking, which our members tell us we do very well. We have about 12 meetings a year all around the world. And this is about bringing members together to discuss best practices and key issues and challenges that they're currently facing, so that they can go back and change their strategy, change their business model, and basically develop their people into being better managers, better leaders. On the knowledge, the business intelligence side, we produce around about 30 reports in a year, and I think that's widely received. I'm going to talk about a couple of them in a minute that we produced last year. And this again helps our industry leaders drive their business forward. And then lastly, the influence piece, which has just started really for us beginning of this year. And I'll talk again a bit about that at the end as to how influence is coming on quite nicely. So in a nutshell, what do? Well, we try and improve our members' competitiveness by being that catalyst for cooperation, by bringing them together so that they can discuss key issues in a non-compete environment. And then we try and differentiate the sector by strategy and also by talking to external stakeholders. So this hopefully gives members a competitive edge, but that competitive edge actually comes from collective intelligence, from the collective knowledge of our members. If the members aren't doing it, we can't tell any others about it. So I think that kind of sums up in one slide what it is that ICMIF is about. Now this slide's a bit busier, and apologies for it, but this is what we really wanted to talk about a little bit more in depth. What are the winning insurers of the future going to be? And this is my view of the top 10 things that insurers need to be doing in order to be the best insurer of the future. And it's gained over the last, well, probably 20 years almost I've been with ICMIF. I'm talking to CEOs of our members and CEOs outside of our members that are mutual, CEOs that are non-mutual. And I think you'll find that a lot of organizations now are moving more and more to strategies that reflect this type of business, which traditionally should, when I go through them, you'll see should be in the space for mutuality, but in reality, it's actually being copied by many of the stock companies as well now. So the first thing to happen has to be that it has to be a well-run professional business. So everything's got to be right in terms of the expense ratios, in terms of the management of the organization. And if we're honest with ourselves, if we went back 20 odd years, there were a number of organizations that were mutual that weren't as professionally run as they are today. So I think we've come a long way in terms of being a professionally run sector. Being customer-centric, it's a very big buzzword, putting customers at the heart of all decisions. It sounds great to do, but in reality, a lot of organizations talk about doing it but never manage to achieve it. It isn't easy. And it's not easy when you're a stock company because your focus is the shareholders, not the customers. So this is the advantage that we have, and we have to make sure that we actually do put customers at the heart of all our decisions. Number 3 is about having a values-based strategy. Now, values is something that we've always had in our sector. And again, if I look at what's happening in the rest of the insurance sector, there's a very interesting report put out this year by PricewaterhouseCoopers, PwC, calling Creating Value from Values. And this is what they're advising their mostly shareholder-based companies that are insurance organizations, is that if you have a values-based strategy, you will get more business. Well, hallelujah, we've known this already. But how many of us can truly say we put the values of our founding fathers at the heart of our business, and that's what all our decisions are based around? And have we got a strategy that actually answers to that? And this is the questions that we're starting to see now out of our members, actually formulating what a values-based strategy is. Even though they've been doing bits of it, now it's actually becoming a proper strategy in its own right. Communicating those values to all stakeholders. Well, I hear it mentioned, and the next one as well is about engaging with those members. And I hear this very often spoken about by insurers, both stock and mutual, that we only can talk to our members once a year because we've only got an annual contract. Well, that's rubbish. You can find plenty of ways to talk to your members through different sources where, if you're a health company, you talk to them regularly about health issues, health and well-being. If you're a life company, you can talk about health, motor safety issues. You can maybe talk about some of the community work that you do. There are lots of opportunities that we actually have. And I just think we need to think slightly differently as the way our businesses are structured, and think differently and out of the box that how do we communicate with those members and how do we engage with them on a more regular basis rather than just saying we can only do it once a year. And I've got lots of examples of our members that are doing great stuff around monthly communications with them, and they're very well received and very, you're never going to engage all of your members, but if you can engage a percentage of them, that is more than you would normally. And this isn't about how many do you get to come into the annual general meeting, because let's put that part of that to one side. That really, whilst it's important in the annual process, it's far more important to be engaging with your members on a more regular basis on other issues and issues that matter in their community. And it's so much easier to do if you're an affinity group, which many of the mutuals are, so they can have that proper discussion. Number 6 is about listening and responding to customers. And this comes back to the insurance industry is great at sitting in its ivory tower and telling its customers what it thinks they need. Well, hallelujah, things have changed. You look at all of the other industries and take lessons out of, say, the retail industry. They structure their product offering based on what the customers want and listening to the customers. And this is what we need to do as well. We need to listen and respond to what the customers are actually wanting. Very often they want simple products. They want something easy to buy, easy to manage, takes the hassle away. And if they ever need a claim, then that's the opportunity where they want their insurance company to step up. So I think listening and responding is something we haven't done very well as an industry generally, but we're in a good position to do that. And we've got all the social media tools now. So ask yourself what are we doing in the social media space, and how are we engaging and listening to our customers through that? Number 7 is about, are we in tune with the changing responsibilities of an organization? And you hear a lot of words banded around about now things like responsible capitalism. Now, how can we be more responsible in the environments we operate in? So how do we embed the social, environmental and ethical issues in our own strategy? And again, we see lots of good pieces of work being done by mutuals around the world, but very often they're siloed into that department there and that department there. What we'd like our organizations to do now is have a strategy, an overarching strategy that comes from the CEO desk that actually says this is how we are being a responsible citizen in our own environment and our own affinity within our own country. Number 8 is about being fair and transparent, and that's both in the reporting and governance area. And I know there are some countries that do it exceptionally well. but also there are some countries that still in the mutual sector don't do it particularly well at all, and they're not very good at disclosing what they should be disclosing to their members on a more regular basis. So I think there's some work to do in that area. In terms of being innovative and market leaders, well, largely we are, because we're normally closer to our customers. So I think there's a lot of innovative work going on in a lot of the areas that we've talked about above, and that's where the innovation can give you that differentiator. And then lastly, in order to do all of the above, we've really got to have a culture that actively encourages them to, and encourages our main resource, which is our staff, to actually do that. So they're my top 10 things of what we should be doing. We have got a document on it, as you can see that picture on the right. It sort of sums it up, but the real power is when you start to try and do these things, what ICMIF does is put other members in touch with those that are already doing great work in this area. So in a nutshell, it's about creating a distinctive customer-focused mutual brand. That's what our ultimate goal is. Now, we've not just brought these up, and as I said earlier, because of some sort of list that we've put together, but there is some science behind it. And last year I interviewed 34 of our CEOs, some of our leading ones around the world, and we produced a report called the CEO Insight, which looks at key areas around business strategy, for both current strategy and the future strategy, innovation, and how they lead. So it's a great read for all of our members. It certainly gives them a competitive advantage. And I make a big statement there. ICMIF leaders are the best in the insurance industry, and I was blown away by many of the insurance leaders that I interviewed, because very often you can have a small social conversation, but this was a hard-nosed, what are you actually doing in your business and how are you doing it? And really, the evidence was stark that most of our members are doing very well in the growth side, much better than the markets. Profitability is excellent. Customer satisfaction is excellent. But how are they getting all of these great results? Well, that comes from the fact they actually are differentiating themselves from the rest of the market. It comes from the fact that they're being innovative and the fact that they are great leaders. And so that's the conclusion we came to from the meeting, from the interviews. And I'll share some of the differentiators with you just very quickly. So in the strategic differences, really number one is excellence in service and providing that service when it's needed. When the rubber hits the road, that's when the moments that matter happen, and the clients actually think of you, your customers think of you as a valuable service in terms of insurance. They've been paying this premium all the years, and then they suddenly have a claim. Well, so many shareholder-based companies see a claim as an expense, and they try and mitigate that expense. And that's the problem with a lot of our industry, and that's why we've lost trust as a sector, not mutual sector, but as an insurance sector. So if we can try and stop that by saying, well, excellence in service is what we're about, and when we have a claim or a member has a claim, that's our chance to excel. We're very customer focused, so we're always asking what's going on. The proximity to the customer is very interesting, as most insurance companies now pulled away from having agents or branch office networks, but most of the mutuals still do have, because that proximity of the customer is very important. And so the fashion or the fad 15 years ago was to get rid of agency sales forces and branch offices because they were expensive to run. But now they're coming back in vogue because people want to be close to a customer. They don't always want to have a call center in a far-flung country to speak to. So I think this is giving us a competitive advantage. Having quality products at the right price, and that's vital. That's not easy to achieve and still make an underwriting profit, but we do it very well because we know our customers. Having simple products, again, insurance is a very complicated area if we want to make it, but it can be simple. And just striving to make the products easy and simple to understand are very important. And then innovation, I'll come to that next. So innovation really is an enabler. It enables you to give superior customer service. It enables you to engage with your members. It enables you to produce new products that are relevant, that are simple. It helps sometimes meet a social need as well. And it also will help you with the risk management. So innovation isn't necessarily always about leading the market and coming up with something totally new. It's about making what you've got better for your customers. And then when it comes to leadership qualities, again, I see a significant difference between mutual leaders and shareholder-based leaders, huge differences. And I speak to them both on quite a regular basis. And these are some of the traits that we see in our leaders that you don't necessarily find in others. So the honesty and the integrity that comes from being a mutual leader. The fact that they listen and communicate at multiple levels. They're passionate and motivational about what they do and who they serve. They try to be inclusive. They're actually remarkably modest, which for a CEO is sometimes unusual. And they have to be courageous. So again, the report talks to all of these key issues and what they see. So turning lastly to external influence. This is a new area for us. As I said, we listen to our members in the CEO report. We know that the number one challenge for them is regulation, or too much regulation. As my blog said recently, the tsunami of regulation that is coming our way. So what are we trying to do? Well, we're actually trying to create the right environment for our sector to grow. We don't want the law of unintended consequences to happen and be negative towards our sector. We needed first and foremost to understand how external stakeholders see us as a sector. So we produced, for the first ever, a global reputation report. It's a huge document in terms of it sampled everyone that uses the internet and anything that's on the internet in any form. So that's about 2.5 billion people that use it, and it was over a 12-month period, and it was in 16 languages. So it was a great document that basically showed us our strengths and weaknesses. And the challenges that came out of that were that we need to raise our profile with the national government and the policymakers. We're not doing as good a job as we should do. We need to increase greater mainstream business coverage in the national media, in the global media. We need to be delivering consistent key messages to external opinion formers, some of which you've heard earlier in the presentation. And we need to keep those leaders that we actually have, the great leaders, we need to put them up front in the forums that are out there where decisions are being made. So we need to mobilize these leaders to actually lead those global conversations. We also needed to map the regulatory influences globally, and you'll be pleased to know I'm not going to go into detail on this, but this is the mind map that most of my CEOs love. Everyone recognizes that this hasn't been done before. This is how decisions are made globally in the regulatory playing field for insurance. The fact that we've mapped it and no one else has means we now know where to go to make that influence. So I'm going to then touch on some early big wins that we've already had. And I'm sure those of you on the line are probably already aware of the great work that Melina, Andrew Crane and the Australian BCCM board members have been doing in getting the recognition of mutuality in the B20. So I don't need to mention that any further, but that is a huge win for the sector globally. But in terms of other things that we would mention in the first, or some of these only happened in the last few weeks, but the OECD now is looking at having an agenda that's going to focus on the social role of insurance, which is wonderful for our sector because we have a lot to say about this. We've been working and influencing them over the last couple of years in terms of getting on their agenda, and this is a perfect piece of research that fits very nicely with us. The United Nations, we've had some great wins on this. All these acronyms, I'm sorry about this, but it's the only way I can fit them on a page. The United Nations Environment Programme, Principles for Sustainable Investment, Financial Insurance, that stands for. We've got a board member on that particular group, and this looks at socially responsible investing, shareholder activism. And we've also got people on the working group. A real win we got last week was the UNEP design of a sustainable financial system. There is a board of, I think, about 18, nearly all bankers, that is reporting back to the UN in about a year's time on how our financial systems should be more sustainable, i.e. include mutuals, co-ops, and be more inclusive. Ironically, they had no mutuals and co-ops on it and no insurers on it. So we've managed to place one of my ex-chairs on there, Kathy Bardswick, who's the CEO of the Cooperators Group in Canada. So again, we've got, by having a person on the boards, you can start to really influence. If you don't, you can't. And then the UN ISDR, which is the Disaster Risk Reduction Working Group, we've got representation on that again, and that is a new program that will be signed next year called the Hyogo Framework for Action 2. There is number 1 as well, which is just coming to the end of its 10 years. And again, the insurance sector, particularly the mutual sector, has a lot to say in disaster risk reduction. And this, again, allows us to open doors into the governmental policymakers by showing the expertise and how it happens in practice. In terms of the World Bank, at their Understanding Risk Conference last month, we had the keynote speaker, one of my board members, Aris Alip from the Philippines, was talking about Typhoon Haiyan and how they'd worked. And now we're on their Disaster Risk Reduction Working Group. The Vatican issued a papal statement last week, which Dame Pauline Green's been very much involved in, and that's supporting cooperatives. And that papal statement is another influencing mechanism that goes to the G20 summit. And then lastly, again last week, we were announced as being a global partner of UNICEF. And there aren't many of those, there are 14 of those in the world, and ICMIF is now being a global partner. We're clearly the only cooperative and mutual one, and there are other organisations there that are global partners, such as Barcelona Football Club, ING, IKEA, can't remember the other names, but there are some very big brands, and then ICMIF, which isn't a big brand, but will be in the future. So I think going forward, the UNICEF senior management are delighted to be partnering with ICMIF because of the work we do in developing countries, matches their values and matches a lot of work that they actually do. So I think we've had a wonderful start to the year, and you in Australia have played a major role in that, and we thank you for that. And I'll leave you with our slogan, which is a global reach for local strength. So most of our members are national, but they're working in a global market, and we need to be together to be stronger. On that note, I'm happy to hand back over to Melina and take any questions you might have.
Thank you so much, Shaun, for that comprehensive and quite exciting, I have to say, from my perspective, and I'm sure from our participants, overview of the growth of the mutual insurance sector. I have already some questions popped up in the Q&A dialogue box. I do invite any of the other attendees to the webinar to put your questions now. We have some 15 or so minutes to take questions. I did note, Shaun, that the growth, the phenomenal growth in mutual insurance really kicked off in 2007. So we're talking about the period of the global financial crisis hitting. And I wonder if you've just got a reflection to start with on our capacity to innovate in times of financial downturn.
Yeah, I think there's a great example in Australia, actually, of innovation. And as it was mentioned earlier, that I'm on the board of Regis Mutual Management, which is a company that sets up new mutuals in Australia and the UK. And we've set up a few in the recent years. But I think the one great case example I'd like to talk about is the universities. And your universities 20 years ago in Australia were struggling to find insurance, liability insurance for their businesses, which effectively, if they're being priced out of the market, which the commercial insurers were doing because they didn't want to take the risk, they would have to have closed down. And it's as simple as that. We're seeing it in other smaller industries, in external activity industries, that sort of thing, where small businesses have had to close. Now, universities aren't small businesses, but they needed to do something. So they pooled together and they formed Unimutual. And Unimutual has now been going just over 20 years and provides risk pooling through a discretionary business model for all of your universities. So think it's probably about 70 or 80% of your universities in Australia now. So there's a mutual response to an inefficient market. It's doing very well. That happened almost simultaneously in America, where two were formed, in Canada, where one was formed, and in the UK, where one was formed, all about 20 years ago. So that's a great answer to inefficiencies in the market. And again, you know, one of your well-known cooperatives, Capricorn, formed its own mutual insurer no more than, I think, 7 or 8 years ago. Again, meeting a need of a particular affinity group. And I think that's a great example of how you can start to set up new mutuals and meet the needs that are there.
Thank you, Shaun. I've got a question from Brian in Australia, and it's really a broad question. Brian's asking what you think is the secret of the success of ICMIF members, given that there is fierce competition in the market, whether you think it's size, management, innovation, the target audience, and what is the key factor in your opinion, Shaun, and is that a key element found in all cooperatives which are successful?
Yeah, it's I could do a whole seminar on that, Brian. Many of the things I mentioned in there, the key attributes for having a strategies that work, and then the innovation that leads from that, and then the right leadership, those things all have to be in place. And we've seen, certainly in the quality of leaders now that we see in mutuals around the world is much higher than ever used to be. And I used to fear a lot when you get a new leader coming into a mutual organization. You're thinking, oh, the first thing they're going to do is look to demutualize. About 7 or 8 years ago, I stopped believing that, because that doesn't happen anymore. What happens is the people come from the shareholder-based company with lots of great skills and commercial skills and apply those skills, and then they absolutely love the values of the mutual, which is me. I did that. So a lot of these leaders that are coming in are bringing the right skills and the right practices and applying those, but absolutely loving working in the mutual sector. So the last thing they want to do is actually demutualize. Actually, they want to make the organizations more mutual. They become real advocates and passionate about mutuality. And I've seen that all over the world. So I think that's one of the key things. I think the other key success where we've seen real big growth in the last 5 or 6 years is in the affinity groups. So there are some very big affinity groups. Probably the largest, most successful one you'd call on would be the USAA, which is the United States Armed Forces one. They're up to about, I think they're about 18th now in the largest insurers in the world. And their growth has been phenomenal over the last 5 or 6 years. And they focus really on their core affinity group, the armed forces and the families of them. But they also focus on excellence in service. And they're always number one in customer satisfaction and service. And that's what we have to focus on, because at the end of the day, price-driven business models, which is what we're seeing and what we've seen in many countries, and price is still an important factor, don't get me wrong. But now that price is becoming more and more transparent, or some would argue it's becoming less transparent, because some of the websites, the price comparison websites are now making it more opaque rather than more transparent, unfortunately. So they're losing the impetus, certainly in this country where it's all started. So because they're becoming more opaque, people aren't going to them, and they're looking for an organization they can build a relationship with. And that's where I think we come into our own very much, because we like to have loyal customers. And again, compare in your country, what is the retention levels of non-life products, for instance, with your members versus the shareholder-based ones. And I'll bet you in the mutual sector, the retention levels are far higher than they are in the rest of the market. And that's not by chance. That's because you work hard, and our members work hard at retaining the loyalty and retaining their customers by the member engagement piece, by the customer service, by offering products that are valuable. So I think all of those charts that I talked to, you've got to get all of them right. You've got to get those top 10 of what the winning insurers of the future, you've got to work on all of those simultaneously. You can't just work in isolation on just one area. Does that kind of answer your question, I hope, Brian?
Well, you certainly covered the ground, and Brian said thanks, Shaun. So perhaps in this next question from Wendy, we can elaborate in a different direction. Wendy's asking whether you believe the recent growth trend in mutual insurance globally is a sign we're entering a renaissance for the sector. And I guess you've covered a lot of this, but what might be the driving forces behind it? I wonder if it has something personally to do with the financial crisis. And from what you know of the Australian sector, could the growth be just as strong here? For example, do you see the opportunity for more discretionary mutuals to perhaps grow out of the cooperative sector?
I'll take the last part first because that's easy. The Australian bit, yes, definitely. You're seeing it already. You saw from some of the stats that I shared. You know, you've seen continuous market share growth, which is real growth over the rest of the sector. The discretionary mutuals that are starting to come in, I think, is a great way of getting new affinities in there. Obviously, you've got your superannuation funds as well, which are most of them are mutuals. I know that's a slightly different sector in the pension sector, but they are marketing themselves as mutuals, and I think there's a value there. And many of your Australian co-ops and mutuals are marketing their values now. So they're not focused on just marketing on price or other differentiators, they're focusing on the values. Are we entering a new renaissance? I think we definitely are. The catalyst has without doubt been 2008 and the global financial crisis. But we have capitalized on that because over the last 20 years, we have built extremely good business models in our sector. We have excellently run businesses, and we are there to take the opportunity to grow. And this is why we've seen the growth in the last 5 years, is because we actually appeal more to the general public than a shareholder-based organization does. And this is why they're all trying to jump into this creating value from values sector, because they're seeing that we've stolen a march on this, or haven't stolen a march, this is our DNA, this is what we do. But because we are a values-based organisation that are in the community and being seen in the community, for the community, we treat people fairly, we treat customers fairly, all of this stuff is starting to resonate a lot more with the general public. And I've got a chart that I use where you look at cycles in the business world. And if you go back to, and then maybe this is a bit more Anglo-Saxon than it would be in other countries, but if you go back to like the 1890s when a lot of the mutuals started, we really had a mutual sector that was very strong in many countries in the insurance sector and others, because of the industrial revolution. The employees stood up for themselves. They wanted to do something different. So you saw the business sector generally was driven primarily at that stage by the mutual sector. And then we had the Second World War, and then we found that everything was nationalised. So governments basically run most of the businesses for the next 40 years. And then we had the beginning of the 80s, and in our country we had the Thatcher era, or Thatcherism. And for the next 40, 50 years, we've seen capitalism being the dominant market leader. And so each one of these periods is about 40 years long. And I think the next period from 2020, I think is going to be the mutual cooperative era. I do really believe that, and the ICA is behind this as well. They're targeting 2020 as a key takeoff year. There's a lot of work that needs to be done to be built up to that, to enable organisations to do that. But we're seeing co-ops, people-owned businesses being set up in every industry, not just insurance. So I do believe businesses that share the wealth better than the shareholder-based model will become the prevalent form in the future. And everything's pointing towards that. And we're starting to see real growth and leverage. Everyone's talking about what this sector can do that it hasn't done in the past. So yes, I do believe we're at the beginning of a renaissance. Yes, everything's fallen into place for us at the right time, but there's an awful lot of work we've got to do to actually make it happen.
Shaun, I have had the opportunity to dip into some of the findings on your Global Reputation Index through the webinars that ICMIF offers. I'm wondering if you could just reflect quickly on one of the challenges seems to be the use, the optimization of social media and the opportunity to communicate the mutual value. Do you see this as a current barrier or challenge for mutual insurers, and how might they overcome it?
I think social media is going to be great for our sector because it allows us to have those conversations with our customers, our members, and allows us to have a two-way conversation rather than what has been, without doubt, a one-way conversation, us telling the customers what they want. This allows the two-way conversation to actually happen. And it talks very much to that member engagement piece, which I think is vital for any strategy within a mutual organisation. If you don't have an active member engagement strategy, I don't think you're going to be able to carry on the business model that you actually have. So social media allows us to do that, and people want to be talked to, particularly the youth of the day. How do you talk to the youth? Do you think the youth is going to go to a broker in the future? Do you think the youth is going to go into a shop? Probably not. They're probably going to talk to their friends and families, or they're going to go on Facebook or whatever it is and find out what it is they need and take advice that way. And then they'll probably buy online. But they'll want and expect a social media presence for those organisations they're going to deal with. And that's not just an insurance. And if they're not there, they'll probably just discount them. So if we're starting to want to attract the younger generation, and I think we have a lot of resonance with the younger generation because everything they've ever seen in their lives, whether it's sharing music, sharing videos, sharing photos on Facebook, everything is about sharing things, which is mutuality. The internet is the biggest mutual. It's about sharing information globally. Okay, there might be a price attached to some of it, but generally it's mostly free. And so getting the mutual concept and the sharing concept and the sharing of risks should be a simple leap for the younger generation. But we have to tell them about it. We have to inform them that it's there, and we have to be part of the two-way conversation. So yes, I do believe it's very important to do that.
Shaun, we're just 6 minutes from the end of our recording of this webinar. I wonder if I can just take one. You can take one more question, please. Oliveira, also from the University of Sydney, is asking what the role of the university teaching and research sector is in the co-op and mutual ecosystem. And Oliveira is a professor at the University of Sydney.
Great question, Oliveira. I think the universities have a vital role in teaching that there are different business models out there. I mean, you know, the holy grail of a lot of leaders is that they must have an MBA. They must have an MBA from one of the top universities, wherever that is. I know what's going on at Yale and Harvard at the moment, and both those MBA programs are starting to talk about different inclusive business models. That's only happened this year. So if the universities can do anything for us, it is just informing the young leaders of the future coming through their courses that there is an alternative business model. Because in most universities that's not being taught. Now, I'm aware in this country there is now a cooperative MBA, which is actually done at Sheffield Hallam University. That only started last year. So we're starting to see universities offering a specific cooperative mutual management course. But there doesn't have to be specifically a course for it, so long as it's part of the overall structure that says profit motivation and profit maximization isn't the only answer. It has to be more about people, planet and profit. It has to be a triple bottom line. No longer can it be profit maximization. We've done that bit. That's finished and over. So to me, the university professors, and I deal with a lot of them around the world, are very excited about the new business model because it's more in tune with things they like to teach about. So the more university professors that take this on board and change their curriculum to teach this as well as the shareholder model, I think that would be a big benefit globally. So great question, Olivera. Thank you very much.
I'm also very pleased to announce that as of next year, the University of Sydney will offer a cooperative and mutual studies unit within the Masters of Commerce business program. So there is some change afoot in Australia as well.
Great. Yeah, that's what we like. It's all moving in the right direction, isn't it?
Shaun, the very final question in the last 2 minutes of the webinar from a member of my own team who wasn't able to be at the B20 summit. Because infrastructure development was ranked highly on the G20 agenda that was discussed when you were in Australia for that B20 summit, what do you think or believe might be the opportunities for mutual insurers and that large asset base that you described earlier, the $8 trillion US dollars? How could that investment be a pathway into infrastructure development?
It's a great question, Mitch, and one that I'm mulling over as to how we can do it. But I think we sit alongside the rest of the insurance industry and the banking and investment ones as well in this, in that at the moment we couldn't do it because the regulation doesn't encourage it. In fact, it actively discourages any risky investments in infrastructure. If regulation was to be changed to actively encourage large asset holders, such as insurance sector, to invest in such projects, then I think we would see a willingness to participate in these infrastructure projects given the right investment return. But at the moment, in the Solvency II regulation, the global standards for regulation for insurance, the Basel III regulation for banking, it's anti any type of investment in this area. So the key recommendation from the B20 is we're not going to invest unless you change your regulation. And that's the harsh truth, because we won't be allowed to. We have to keep more capital, and that's not just the mutual sector, that's all insurers. So that's what's got to happen first. And if the G20 summit in November takes that on board and knocks some of this tsunami of regulation on its head and says, come on guys, you've got to work together here, rather than the regulatory industry just working in silo and saying, you know, we don't want this because it's not allowed. Well, if for the benefit of the planet, we start to see the presidents of countries of G20 saying you must change your tack, then that's a win for all of us, I think.
And the great opportunity, of course, Shaun, was that the cooperative and mutual sector was part of that dialogue. Yeah. Unfortunately, we now come to the end of our time, so we can't take any more questions. I'd like to thank Shaun very sincerely on behalf of the Business Council of Cooperatives and Mutuals and the Australian Cooperative Sector and Mutual Sector. Thank our participants for attending today's webinar, and thank our host, LBMX, for again hosting a wonderful webinar. Following this, the close of this webinar, we will circulate the link to the recording, and you've kindly agreed to share your PowerPoint presentation. Thank you, Shaun, and thank you everyone for attending today.
Yeah, and thank you for staying up late, everyone.
Thanks very much. This now concludes the webinar. Thank you.
Thank you.